A once unstoppable housing boom in Texas is now slowing. And in some cities, prices are quietly falling for the first time in years. What caused this sudden shift in the Lone Star State's housing dream? For years, Texas stood as the crown jewel of America's housing expansion, a symbol of affordability, growth, and promise. Cities like Dallas, Austin, and San Antonio became magnets for people fleeing the high prices of coastal states. The Lone Star State's open land, lower taxes, and business-friendly climate made it a dream for both homebuyers and investors. During the pandemic, this migration wave turned into a gold rush. Houses were selling faster than they could be listed. Bidding wars became the norm, and prices surged to historic levels. Between 2020 and 2023, Texas median home prices jumped nearly 50%, an astonishing rise that transformed quiet suburbs into fast-moving markets where buyers had to decide within hours or lose their chance. But in 2025, the story began to change. The same boom that fueled so much optimism started to show cracks beneath its glossy surface. Interest rates climbed, affordability plunged, and a growing fear of an economic slowdown began to cool the market's fiery pace. For the first time in years, homes in major Texas cities weren't vanishing overnight. Instead, for sale signs lingered, price cuts appeared, and the once relentless march of appreciation slowed to a cautious crawl. According to recent Redfin data, 10 of the nation's 50 largest metropolitan areas saw home prices decline year over year, and 4 of them were in Texas. In Dallas, the fall reached 3.4%, marking one of the sharpest corrections in the country. Austin, the tech darling once hailed as the next Silicon Valley, saw prices dip 1.2%. San Antonio slipped by 1.8%, and Fort Worth edged down by 0.2%. These may seem like small percentages, but in markets that had been soaring non-stop, they signaled something deeper, a turning point. Inventory, which had been strangled during the pandemic, was now flooding back. Across Texas, new listings were up over 11% compared to a year prior. The rapid buildup of supply clashed with slowing demand, creating the perfect storm for price stabilization. Redfin agents across Texas described a common pattern: nervous first-time buyers, cautious investors, and sellers more willing to negotiate. The days of paying over asking price were fading fast. In their place came price reductions, creative financing offers, and longer waiting times. Many buyers, especially younger families, decided to pause their search altogether, hoping that mortgage rates might fall later in the year. The result was a visible cooling. Not a crash, but a collective deep breath after years of runaway growth. Texas, once the land of endless opportunity, now faced a new reality. The balance between demand and supply was shifting. The housing market that had defined the state's modern boom cycle was finally easing into something unfamiliar: stability. And while some saw this as a warning, others viewed it as a long overdue correction, a necessary pause before the next chapter of Texas housing evolution truly begins. For much of the last decade, Dallas wasn't just a Texas success story. It was one of America's most dynamic housing frontiers. Fueled by booming job growth, a diversified economy, and waves of new residents, the city became a haven for both investors and families searching for stability. During the pandemic, Dallas transformed almost overnight. Remote workers from New York, California, and Chicago flooded in, lured by lower taxes, warmer weather, and homes that, compared to coastal markets, seemed like bargains. The tech sector exploded, bringing high-paying jobs and deep-pocketed buyers who could outbid locals. By 2022, bidding wars became routine, and homes that once cost under $340,000 were selling for nearly $500,000. But what once felt like endless momentum has now slowed to a crawl. According to recent data from Redfin and Newsweek, Dallas has joined the list of major U.S. metros where home prices are slipping after years of nonstop gains. In May 2025, Dallas reported a year-over-year price drop of 3.4%, the second largest in the nation after Oakland, California. The same city that symbolized Texas' housing boom now reflects the new era of market correction. The signs are everywhere: listings piling up, sales declining, and homes staying on the market longer than at any time since before the pandemic. Economist Amy Nixon describes the shift as both inevitable and necessary. She points out that during the height of the frenzy, Dallas saw a record influx of buyers with extraordinary purchasing power, many earning over $160,000 annually, including foreign workers on H-1B visas. Investors also poured in, turning single-family homes into rental properties and squeezing out traditional buyers. It created an unsustainable cycle where home prices soared, taxes rose 41% in just 5 years, and affordability evaporated. Now, as interest rates remain high and mortgage costs climb, that inflated demand has deflated, exposing a city at a crucial turning point. Inventory levels tell the clearest story. Just a few years ago, in 2021, Dallas had around 6,000 active listings. By 2025, that number had exploded to nearly 30,000, 5 times more than during the pandemic frenzy. Builders rushed to meet demand during the boom, and now their developments sit waiting for buyers who are no longer in a hurry. Properties that once sparked bidding wars are now seeing price reductions and open houses stretching over weeks instead of hours. This slowdown doesn't necessarily signal disaster. It's a rebalancing. For buyers, it means opportunity. More options, more negotiating power, and fewer bidding wars. For sellers, it's a reckoning. The realization that Dallas' meteoric rise was unsustainable. As the market adjusts, the city stands at a crossroads between its booming past and a more measured, mature housing future. Whether it stabilizes into long-term growth or faces deeper corrections will depend on how well Dallas can navigate this new balance between optimism and restraint. When you strip away the headlines and speculation, the truth of Dallas's housing market in 2025 lies in the numbers, and they paint a picture of a city in transition. After years of relentless escalation, the latest data from the Texas Real Estate Research Center reveals a market that's cooling, recalibrating, and finding a new equilibrium between sellers and buyers. The frenzied pace of 2021 and 2022 has been replaced by slower negotiations, longer selling periods, and price adjustments that hint at both caution and opportunity. In August 2025, the Dallas-Fort Worth-Arlington metro area recorded 8,246 total home sales, marking a modest 1.59% year-over-year increase. At first glance, that might sound like stability, but a deeper look tells a more complex story. While overall dollar volume reached $4.09 billion, up just 1.25% from the previous year, the median closing price dipped by 2.26% to settle around $387,599. This may seem minor, yet in a region that once saw double-digit annual gains, it represents a major psychological shift. Buyers are no longer willing to stretch beyond their limits. Perhaps the clearest signal of this changing tide lies in inventory levels. Active listings have surged by more than 22% compared to 2024, hitting 36,404 homes on the market. That's a dramatic reversal from the pandemic years, when inventory shortages pushed buyers into panic mode bidding wars. Now there's an abundance of choice, and that surplus has given buyers the upper hand. The months of available inventory rose to 4.7 months, up nearly 18%, a strong indicator that the region is moving steadily toward a buyer's market. Homes are also staying on the market longer. The average days to sell rose to 89 days, up 8.5% from the previous year. In practical terms, this means sellers who once expected instant offers are now waiting nearly 3 months before finalizing a deal. This shift reflects not only reduced urgency among buyers, but also a broader sense of uncertainty about future pricing trends and interest rates. The softness extends across property types. Single-family homes, the backbone of Dallas's housing landscape, saw their median price fall by 2.42% year-over-year. Townhomes dipped by 7.22%, and condominiums were hit hardest, down 8.22%. Each category reveals a distinct layer of the city's cooling pattern. Higher-priced homes and multi-unit properties are absorbing the most pressure, while affordable homes under $250,000 remain relatively stable. In essence, Dallas's housing data tells the story of a market that's shifting gears, from runaway growth to careful balance. The numbers confirm what many agents have been saying for months. Demand hasn't disappeared, but it's no longer desperate. Buyers are cautious, sellers are realistic, and the market's fever has finally broken. It's not collapse, it's correction. A slow, deliberate move back to normalcy after years of chaos. Not all corners of the Dallas housing market are behaving the same way in 2025. Beneath the overall cooling trend, the story looks dramatically different depending on what kind of property you're talking about. Single-family homes, townhomes, and condos each tell their own tale of shifting demand, buyer sentiment, and post-pandemic correction. Together, they reveal a layered market that's no longer one-size-fits-all, but rather a mosaic of micro-markets moving at their own distinct pace. Let's start with the backbone of Dallas real estate, single-family homes. For decades, they've defined suburban growth and anchored family living across North Texas. In 2025, they still dominate the market, making up the vast majority of sales. According to the Texas Real Estate Research Center, single-family home sales actually rose 2.61% year-over-year in August, with a total dollar volume of $3.91 billion. However, beneath that modest increase lies the reality of price softening. The median closing price dropped 2.42% to $390,315, signaling that sellers are adjusting expectations. The typical home now sits for 88 days before finding a buyer, nearly 2 weeks longer than last year. Yet, despite the slowdown, this segment remains relatively stable compared to others. Buyers still trust single-family homes as safe, long-term investments, especially in desirable school districts and well-connected suburbs like Plano, Frisco, and McKinney. Then there's the townhome market, which tells a different story, one of hesitation. Once seen as the middle ground between apartment living and full homeownership, townhomes have lost some of their shine in 2025. Sales volumes dropped 6.37%, while the median sale price tumbled 7.22% to $359,990. New listings are down, but active listings have jumped over 24%, indicating that what's being built simply isn't selling fast enough. With inventory now sitting at 6 months, this sector has officially tipped into buyer's market territory. Rising insurance costs, HOA fees, and mortgage rates have made these homes less appealing to the very young professionals and downsizers they once attracted. Instead of upgrading to townhomes, many buyers are either renting longer or holding off altogether. And finally, the condo market, arguably the hardest hit of all. Condominiums have become a case study in oversupply and under-demand. Sales plunged 20%, and the median price fell 8.22% to just $229,000. Condos now spend over 100 days on the market, with inventory levels surging close to 8 months. A dramatic shift from the days when urban living in Uptown or Deep Ellum commanded premium bids. Post-pandemic lifestyle changes, remote work flexibility, and persistent maintenance costs have all played their part in dampening condo demand. So while Dallas's housing market as a whole is cooling, the experiences are vastly different depending on the property type. Single-family homes are holding firm, townhomes are struggling for direction, and condos are searching for a new identity in a city where space, once scarce, is suddenly plentiful again. If there's one phrase that defines the mood of the Texas housing market in 2025, it's the affordability squeeze. What was once the biggest draw to cities like Dallas, Austin, and San Antonio, the promise of affordable living, is slowly eroding under the weight of rising costs. For years, Texas marketed itself as a haven from the crushing expenses of coastal life. But that image is beginning to crack, as property taxes soar, mortgage rates hover near decade highs, and insurance premiums climb at a record pace. The combined effect has pushed many would-be homeowners to the sidelines, turning what used to be a buyer's paradise into a financial balancing act. Let's start with property taxes, the silent budget killer. Unlike many states, Texas doesn't levy a state income tax, meaning local governments rely heavily on property taxes for funding. That structure made sense when home values were stable, but after 4 years of skyrocketing prices, the system has turned punitive. In Dallas alone, homeowners are paying roughly 41% more in property taxes than they did 5 years ago, according to Redfin data. The surge in valuations has inflated tax bills across the board, especially in suburban counties like Collin and Denton, where property values exploded during the pandemic. Even as prices softened slightly in 2025, those taxes aren't falling, at least not yet, creating a financial strain that's pushing some homeowners to sell or relocate. Then there are mortgage rates, the second major squeeze on affordability. After a decade of historically low interest rates, the tide has turned sharply. The average 30-year fixed mortgage rate remains around 6.5%, double what it was in 2021. For the average buyer in Texas, that translates to hundreds of dollars more per month in payments. Even if home prices have dipped modestly, many who locked in ultra-low rates during the pandemic are now rate-locked, unwilling to sell because moving would mean taking on a much more expensive loan. As a result, new buyers face limited choices, and existing homeowners feel trapped in place. And if that weren't enough, insurance costs have quietly become one of the biggest pain points in the state's housing equation. From hailstorms to hurricanes, Texas is no stranger to natural disasters, but the frequency and severity of these events have driven insurance premiums sky high. Across major metros like Dallas, Houston, and Austin, homeowners are reporting annual rate hikes of 20 to 30%. Some insurers have even pulled back from high-risk zip codes altogether, forcing residents to seek costly private policies. Add in higher HOA fees, especially for newer developments, and monthly housing costs are now at levels many middle-class Texans can no longer comfortably afford. The result is a clear shift in the housing narrative. Texas, once the land of wide-open opportunity, is feeling the same affordability pressures that once plagued the coasts. The dream of a spacious suburban home is still alive, but it's getting harder to reach. For many Texans, the question is no longer where to buy, but whether they can afford to buy at all. Beneath the surface of Texas's real estate slowdown lies a deeper, more complex web of economic forces shaping the market's direction. Housing, after all, is never just about prices and listings. It's about people, movement, and confidence. For years, the Texas miracle was powered by two massive engines: job growth and migration. Together, they turned cities like Dallas and Austin into magnets for workers and investors alike. But in 2025, those same forces are beginning to shift, revealing the undercurrents that explain why the once unstoppable market is finally catching its breath. First, let's talk about jobs, the heartbeat of the Texas economy. The Dallas-Fort Worth-Arlington area has long thrived on its diversified industries: technology, finance, logistics, and healthcare. Even now, job creation remains strong by national standards, with over 27,000 new jobs added in the past year. However, the tone has changed. Tech sector slowdowns and corporate layoffs are tempering the hiring boom that once defined the pandemic years. Companies that expanded aggressively in 2020 and 2021, often lured by Texas's tax incentives and cheaper land, are now tightening budgets. This slowdown doesn't mean collapse, but it introduces uncertainty. With fewer guaranteed paychecks and smaller annual raises, potential buyers are hesitating, choosing job security over homeownership. Then there's migration, the second great pillar of the Texas housing surge. Between 2020 and 2023, Texas became the top destination for domestic movers in the U.S. Thousands of families fled high-cost states like California and New York, trading cramped apartments for sprawling homes in Frisco or Round Rock. That migration wave was supercharged by remote work and corporate relocations. Toyota North America, Charles Schwab, and Tesla all planted deep roots in the state. But by mid-2025, the tide is slowing. With mortgage rates high and job markets stabilizing elsewhere, fewer Americans are uprooting to start over in Texas. Census data and Redfin migration trends show that inflows are leveling off, marking the end of a population surge that once fueled endless demand for housing. This cooling migration also feeds into the psychology of the market, an often overlooked but critical factor. Housing is as much emotional as it is economic. When people believe prices will keep rising, they rush to buy. When that belief fades, so does urgency. In Dallas, Austin, and San Antonio, that psychological shift is now evident. The fear of missing out has flipped into a fear of overpaying. Buyers are more cautious, investors more patient, and sellers more anxious to negotiate. The collective mindset of 2025 feels markedly different from the frenzy of 2021. The optimism hasn't disappeared. It's just more measured. Texans still believe in growth, but they're now aware that even the most robust markets need to breathe. The job market is cooling, migration is normalizing, and market psychology is recalibrating, not collapsing. It's a quieter kind of confidence, one built on patience, adaptation, and the understanding that the Texas housing story is far from over. It's simply entering a new chapter. Despite all the noise surrounding Texas's real estate slowdown, one thing is becoming increasingly clear: this isn't a housing crash. It's a correction, a gradual, necessary rebalancing after years of unsustainable growth. The numbers, forecasts, and expert opinions all point in the same direction. Texas, and Dallas in particular, is cooling, but it's doing so in an orderly way. After the chaos of the pandemic housing boom, the market is finally rediscovering something it lost along the way: balance. According to data from Zillow, the Dallas-Fort Worth-Arlington region is projected to see a 2.2% decline in home values by mid-2026. That's hardly catastrophic, especially compared to markets like Austin and Corpus Christi, which are expected to dip more sharply at around 4.2%. In fact, Dallas's mild correction suggests a return to realistic pricing rather than a collapse. Even with a small drop in value, homes across the metro remain significantly more expensive than before the pandemic, showing that long-term demand and value are still intact. Economists view this shift as a sign of normalization. During the height of the frenzy, home prices in Dallas soared nearly 45%. In just 2 years, far outpacing wage growth and pushing affordability to the brink. Now the market is self-correcting. Inventory levels are rising, mortgage rates have stabilized around 6.4%, and buyers are finally regaining bargaining power. It's not that the demand has disappeared, it's that it's becoming more cautious, rational, and income-driven. On the national level, the picture supports this outlook. Lawrence Yun, the chief economist for the National Association of Realtors (NAR), forecasts a moderate recovery across the broader U.S. housing landscape. He predicts existing home sales will rise 6% in 2025 and another 11% in 2026, while new home sales will increase by roughly 10% next year. That may sound optimistic, but it reflects growing confidence that inflation will ease and interest rates will slowly trend downward. Yun expects mortgage rates to average around 6.4% by late 2025, dropping to 6.1% in 2026, a subtle but crucial improvement that could breathe new life into Texas's cautious buyer pool. Within Texas, the forecast suggests uneven performance. Cities like Austin and San Antonio are expected to face steeper adjustments due to their heavier exposure to speculative investment and pandemic-era overvaluation. On the other hand, El Paso and McAllen could actually see modest growth of around 0.9%, driven by affordability and stable local economies. Dallas, sitting in the middle, represents the state's transition point. Not booming, not crashing, but stabilizing into something more sustainable. What this means for homeowners and investors is simple. Patience will pay off. Texas real estate has always moved in cycles, and this one is no different. The feverish highs of 2021 were never meant to last, but neither are the anxieties of 2025. As the dust settles, the next year will likely mark the slow emergence of a steadier, healthier housing market, one that grows not from speculation, but from real enduring demand. For the first time in years, the upper hand in the Texas housing market is beginning to shift from the seller to the buyer. The days when homes in Dallas or Austin vanished within hours, often fetching tens of thousands over asking price, are fading into memory. What we're seeing in 2025 is a new kind of housing story, one where patience, leverage, and strategy matter again. Buyers who were once priced out or discouraged are returning, but this time they're in no hurry, and they know they finally have room to negotiate. Throughout much of the pandemic, Texas real estate felt unstoppable. Sellers held all the cards, bidding wars were common, contingencies were dropped, and as-is deals became the norm. Fast forward to 2025, and the script has completely flipped. The latest data from Redfin shows that 33% of homes in Dallas sold with price drops in April, a sign that sellers are finally being forced to compete for attention. At the same time, only about 20% of homes sold above list price, a sharp decline from the frenzied highs of 2021 and 2022. This shift may seem subtle on paper, but in practice, it represents a dramatic rebalancing of market psychology. Buyers are now empowered by three critical trends: rising inventory, longer days on market, and reduced urgency. With over 36,000 active listings across the Dallas-Fort Worth area, more than 5 times the number during the pandemic frenzy, the scarcity that once defined the market has evaporated. Homes that would have sparked bidding wars 2 years ago now sit unsold for weeks or even months. This abundance gives buyers options, and with options comes power. They can negotiate harder, ask for repairs, request closing cost credits, or simply wait until the right deal appears. At the same time, sellers are adjusting to a new reality. Gone are the days of multiple offers within 24 hours. Now sellers are offering incentives, from rate buydowns to cash for cosmetic upgrades, just to secure a contract. Builders, too, are joining the competition, offering discounts, design credits, and mortgage assistance to move unsold new homes. For the first time since 2019, buyers are walking away from negotiations without fear that another offer will immediately replace theirs. But perhaps the most important element in this new landscape is market balance. What's unfolding isn't a collapse, it's normalization. A healthy real estate market is one where neither side dominates, where prices rise modestly, homes take reasonable time to sell, and both parties have negotiating room. Texas is inching closer to that point. The frenzy has cooled, but confidence remains. In this new chapter, buyers are no longer spectators. They're participants again, deliberate, informed, and unhurried. The balance of power has finally returned, bringing with it the kind of stability that turns chaos into opportunity and speculation into strategy. In 2025, Texas real estate isn't about racing to buy, it's about choosing wisely. The Texas housing market has always been a magnet for investors, a land where population growth, business expansion, and affordable land combine to create one of the most profitable real estate environments in America. But as 2025 unfolds, that narrative is shifting. The easy money days of the pandemic boom are gone. Instead, investors now face a market in transition, one that demands patience, precision, and a deeper understanding of where true opportunities lie. The old game of buying anything and watching it appreciate is over. The new game is strategy. Dallas, in particular, remains a cornerstone of this evolving investment landscape. The city's fundamentals are still strong: a diversified economy, steady population growth, and one of the largest job markets in the country. Corporate relocations continue, with major employers like Toyota, Topgolf, and dozens of tech firms expanding their presence in the Dallas-Fort Worth metroplex. Yet, even with these strengths, investors are approaching with more caution than in years past. High interest rates, rising insurance costs, and property taxes have squeezed profit margins, forcing investors to rethink their models. Still, within this correction lies genuine opportunity. With home prices dipping around 2% to 3%, investors can now enter markets that were previously too competitive. The frenzy has cooled, which means less bidding, more negotiation, and a higher likelihood of securing favorable deals, especially on properties that have sat unsold for months. Distressed listings and homes that need renovation are beginning to reappear, offering value-focused investors the kind of entry points that vanished during the pandemic rush. The rental market, too, continues to show strength, supported by Texas's young and mobile workforce. Dallas's rental yields remain higher than many coastal cities, and with homeownership affordability falling, demand for rentals is likely to stay robust. Another key factor driving investor optimism is the demographic advantage. Dallas-Fort Worth is expected to add more than 1 million new residents by 2030, fueled by job creation, migration, and urban expansion. This constant population growth ensures ongoing demand for housing, both rental and owned. For long-term investors, that means stable appreciation potential even amid short-term volatility. In addition, the state's pro-business policies, absence of income tax, and ongoing infrastructure investments keep Texas an attractive destination for capital inflow. However, the smartest investors in 2025 aren't chasing trends, they're adapting to them. They're looking beyond the flashy downtown towers and into emerging suburbs, where affordability, new infrastructure, and growing job hubs converge. They're favoring cash-flowing properties over speculative flips, and multifamily or build-to-rent projects over single speculative homes. The Texas market is no longer the get-rich-quick arena it was during the pandemic, but it's still rich with potential for those who play the long game. As prices level off and interest rates gradually ease, the next wave of growth will belong not to those who rushed in, but to those who stayed smart, stayed patient, and understood that real opportunity often hides in times of transition. When you take a step back from the month-to-month data and the short-term headlines, the story of Texas real estate becomes one of remarkable endurance. Markets may cool, prices may fluctuate, and interest rates may rise and fall, but the underlying promise of the Lone Star State remains. Texas has always been defined by resilience, reinvention, and an unshakable ability to adapt. The housing market of 2025 may be slowing, but the long view tells a different truth. This is not decline, it's evolution. The fundamentals that made Texas a powerhouse haven't disappeared. They've matured. The state continues to add hundreds of thousands of new residents each year, drawn by its job opportunities, cultural vibrancy, and comparatively affordable cost of living. The Dallas-Fort Worth Metroplex alone has become an economic juggernaut, home to more than 7.5 million people, and some of the fastest-growing suburbs in the nation. Infrastructure investments, from highways to transit systems, are keeping pace with expansion, laying the foundation for decades of continued growth. And beyond the statistics, Texas still represents something deeply human: possibility. The dream of owning a home, starting a business, or building a new life still thrives here. Even with rising property taxes and insurance premiums, Texas remains more affordable than many major U.S. markets. Compared to cities like Los Angeles, New York, or San Francisco, home prices in Dallas or San Antonio still feel attainable. That relative affordability will continue to attract both families and investors, especially as other regions grapple with restrictive zoning, aging infrastructure, and limited housing supply. Over the next decade, as mortgage rates gradually normalize, Texas is poised to reassert itself as the country's epicenter for real estate opportunity. It's also worth remembering that Texas real estate has always moved in cycles. Booms give way to slowdowns, and slowdowns prepare the ground for the next expansion. The slight cooling seen in 2025 is no different. It's a market catching its breath after a historic climb. With national forecasts predicting economic stabilization, moderate job growth, and easing inflation, Texas sits in a prime position to benefit from the rebound once interest rates begin to ease. The strength of its diversified economy, spanning energy, tech, healthcare, and logistics, ensures that housing demand won't vanish. It will simply shift and recalibrate with time. So, when you look ahead to 2026 and beyond, the outlook is far from grim. It's steady, patient, and quietly optimistic. Texas is not just surviving a housing correction, it's redefining what sustainable growth looks like. The frenzy of the past few years may be gone, but what remains is more valuable: a balanced market built on real demand, solid jobs, and long-term vision. That's the enduring promise of Texas real estate. A future not of fleeting booms, but of lasting strength.